Well, the headline says it all today. Momentum and stops are potent force. So we're going to look at that a bit later on when I look at the momentum indicator in trading tactics and how they can go very well hand in hand. Hi, my name is Richard Lee. I manage the Stockradar.com.au website for you. We identify the early stages of a trend, we jump on them and we simply follow them high using our risk management process to eke out a small loss or a big profit. And that's how we do it. Okay, so today the market's paused its highs, had a good ramp up towards the highs the last couple of weeks. Look at the ASX 200, we looked at BHP and CBA last week as barometers because they're also near their highs. So they take up over 20% of the market, so they're going to drive that index to a large extent. So we'll keep an eye on that there. Also noticed gold coming to the party a bit late. Now, you know, I've been a little bit negative on gold for a while, but finally we're starting to get some movement there. Maybe a little bit late coming to the show, but I think it is showing promise at the moment, interestingly enough, at this time. So we'll have a look at a couple of gold stocks and the gold index a bit later on. But for now, we're going to get to the markets. First off, we'll talk about the ASX 200, Stockradar portfolio, ASX stocks, and then trading tactics later on. And momentum is the topic of the day. Momentum measures acceleration. When you put your foot on the pedal, you go faster. When you take your foot off the pedal, you go forward, but you go forward at a slower rate. And that's what momentum measures. So we'll have a good look at that a bit later on. But as I said before, let's get to the markets and have a look, see how they're going. Okay, Dow Jones. Well, the pressure's still down, really. I mean, we've got this change in trading action here. We've seen the lower highs here. We struggled again this week. Even if there's some rallies, we've got some heavy red bars along here, and we've also got the momentum index turning negative. So there's been a significant shift in that overseas market. And the Nasdaq is no different, as we know. It's even worse, probably. It's coming off. We've failed again at this little point here, the average, and a bit of resistance here, and we're coming off again. And again, the activity's been pretty heavy, and momentum is very weak. So it is struggling. Printed another lower high this week. Watch out. Okay, now commodities, gold. We're going to talk about this a bit later on. But it is looking interesting. The US gold price is perhaps not looking vastly interesting, but it is having a shot at those highs. We notice that these lows have been getting higher, and this recent pullback from the highs has really just held up above here at about 1890 US dollars. So an interesting situation. It may explode, I don't know yet, but we'll have a look at some other gold indexes in a minute. But that's the US gold price for the moment, lurking but not breaking. Brent crude, well, it's got this volatility below a major high after a large trend, and we've seen this volatility creeping, which does make it dangerous, and we've seen the price of Brent jumping around $4 or $5 a night, and it's been quite jumpy, and this is what we can see here. So for the moment, the other interesting thing here is the low activity. So it does mean that the selling really hasn't come off yet. More buyers perhaps pulling off a little bit, but momentum's still high. It's above the average. So on a trend intensity basis, it's still good, but that volatility does worry me a little bit. So just be careful on those gold stocks, on those oil stocks. And copper, again, lurking but not doing anything. It's got this big pattern here, which is probably a bullish pattern because we're holding onto this gains, and we've got some higher lows here, which suggests it's going to go. It just doesn't seem like it's ready, and sometimes markets are like that, and all of a sudden they might explode. It might be a bit like gold. All of a sudden they might decide now's time, but we'll keep an eye on that and we'll monitor it. The price will tell us what it's going to do when it does. Okay, now to the ASX 200. As we said before, it's lurking at its highs. It's just sitting under there. We've got a few long bars here, so it can't quite get through at the moment. S1 is a good correction level back at 7,000, so that's our range for the moment. So the highs are being challenged. Are we going to get through or not? We've got that resource bent in our market, which is keeping us strong. Stocks like BHP are on their highs, and we've got accumulation of a few other. Slowly we're seeing some more metals and miners come into there, and even gold might be happening, so we'll look at that a bit later. But the ASX 200 is doing well at the moment, near its highs. The Stockradar portfolio was up this week to 36 stocks of 167 covered, and we've got three ETFs in there as well, 21 of those covered. So if I look at the overall picture, the 33 stocks of 167 is about a 20% weighting, so 20% trending stocks, the other 80% are not. And we know some of those heavyweights are some of those trending stocks. Now, also you'll see the conservative portfolio is also up now to 4 stocks out of 20. It's also showing that 20% exposure to the market, so it's not fully exposed, and we're very careful. That's so what the stock picks are saying, and what the conservative portfolio is saying is be careful at the moment. Then again, we go to the energizer portfolios, which is where I really focus on my trends, my high conviction. I have 5 out of 5 stocks in my 5-stock portfolio. The 10-stock portfolio is full once again. Our focus is on trends, our high conviction. That's what we go for. So if the stops go off, we get out quickly. But for the moment, if the market's going to go, and there are some good trends out there, as we know, if we focus on those, that's where we're going to make some money. So even now building a 5-stock portfolio, which has been jumping up and down of recently, it's still showing a 12% gain over the last year, so that's not so bad. And in the sectors, we've got a new entrant. We have the energy, of course, property, but also utilities are snuck in there. And I'm going to look at one utility stock a bit later on for you. Okay, so that's the ASX 200. Moving along now to some stocks. Okay, as I said before, we looked at BHP and CBA. If you want some updates on those, you have to go to Stockradar to have a look, but they are looking very interesting at the moment. The gold index is what I want to start off with here at the moment. Now, the gold index here, you can see we've had some big support levels. We had a big rally along back here a while ago in sort of 216, 218, 219. Then the market sort of went sideways. It's come down and found some very good support at S1, which is around 5,800 on the Australian gold index. We're now getting this pattern here where it's starting to break this downtrend and move higher above here. The average is turning up. We don't have any volume on this, but we've also got the MACD. So it's not looking too bad, the gold index itself. And I have a couple of gold stocks that have just started to come in, so interestingly enough. So we're going to look at the major gold stock, and there's a similarity in this chart to the gold index, very similar. So we've got this big support level down here at S1, and we're now starting to break up, which the Newcrest hasn't actually done yet. It's still rating at trend intensity rating of -1. I think that's right. It may be +1. I'm not too sure, but it's pretty well neutral at the moment. But we do have some good volume here and some momentum, and it's above the average. So all the settings are right to confirm a price break, which is the final nail in the coffin. So we're looking at Newcrest pretty closely at the moment. As I said before, we've got a couple of new entrants on Stockradar, if you want to have a look at those in the gold sector. So some interest maybe finally happening there. We see the gold price, US gold price where it is. The gold index has broken higher a little bit, and Newcrest may well look. The buying down here is very, very encouraging for me in this last rally off S1. So we've got a good risk reward, which means the base here is pretty solid below it, but we've got plenty of upside if gold decides it wants to go higher. So keep an eye on Newcrest and some of those other gold stocks that I pointed to. I mentioned utilities before. APA Group was one we entered a while ago, back in probably late December. And it has faffed about for a couple of months, really frustrating us, but it didn't break its stop loss and is now rewarding us. It's broken out of this little pattern here and it's now kicking higher very well. Volume is reasonable, momentum is good, and the moving averages signals are all good. So trend intensity rating is 10, and we're looking at the next objective, which is R1, up around $11.60, $12, or sorry, probably around $11.60 is probably what we're looking at. And above there is a new high. Remembering the big base of support we've got down here, if we go right back here, we can see this huge amount of support going back about 6 or 7 years. So that's again nice support that it's rallied off. And it's starting to get a bit of confidence there. So in that utility sector, I also cover AGL, which has been interesting lately, and also Ampol, which I think is a bit of a takeover happening there. So they're the main utility stocks we cover, but they are looking interesting at the moment. Okay, now the next one I want to talk to you about is Metcash. Now some of you might have followed Metcash, made a little bit of money on that recently. Our last trade was quite a good trade. It didn't look like much. But really, when we're looking at these sorts of things, we've got to look at the money in the bank and what it is and what the return is, and that's important. So for Metcash, we had an entrance here back in late 2020. We had a trend reversal pattern here, and then our entry wasn't until up here. So we've got the signal here, the entry's up there. A little bit of word on finessing here. Now that's not such a good entry. Sometimes they're good, sometimes they're bad. My experience, 6 of one, half dozen the other. I don't worry about finessing. When I enter a trade, I exit at market. When I exit a trade, I exit at market. I just do it. I don't want to fiddle around with a few points, because in the end it often goes bad and the stress levels go higher. So don't worry about finessing too much. If your strategy is good, you'll win some and you'll lose some. Here we've got a bad entry. It's tough. Okay, so the break here was up here, and we've actually been stopped out up here, which is around 294. So it may not look like a lot here, but we did climb up here quite well. We've got 21% return there, which includes 22 dividend payments of 14 cents. So in the end, it's a 12-month trade and generating 21%. is fantastic. Okay, so that's quite good. Now that's one trade. We've done one trade on Metcash. The way I look at markets, the way I look at stocks, the way I look at trades, all I'm looking at is price action. The stock name is not that important to me. It's really what is happening. So here, I've had a trade here, a 21% trade in the last year. I then waited for this to see what happened. Once it broke down here, my stop went off, which you can see just there. When my stop went off just there. And just move that back a little bit. Okay, and unfortunately, it went straight back up again. So again, it may look bad, but this is the way we trade. So really, I'm neutral at this point here, and I'm waiting for this new high. I always must buy a new high to ensure we're always exposed to a new uptrend. So we bought it back into Metcash back here in later March, and it's starting to move at the moment. So this is just a separate trade of the last one. I'm not looking at the history, I'm just looking at this little as a cocoon, little entity. It's a new high, I buy it and I set a stop, and that's how I work. That's the Stockradar strategy. That's how where we keep on uptrends if they occur. I can't miss them, because some of those uptrends can be fantastic rewards. So that's Metcash, a little bit about the Stockradar strategy and how it works, and being realistic about what you're earning and what you're getting. Don't worry about tops and bottoms. Too many people are focused on those things. It's a matter of getting a return on your money. Okay, now I want to go to a couple of smaller stocks here just to show you. I'm talking about momentum today. Momentum is really important because that's what I need to make the money, because when I'm looking for a break, I'm looking for a momentum shift, the buyers over the sellers to push the price higher. So that's what I'm looking for. So there's a little stock here that I wanted to show you with just a very, very simple trade here, and a little stock here called Mincor Resources. Okay, now it's made a new high here back in the 20th of December, and again, the break is here, but I don't get my entry till the next week. I always enter on the Monday. It may seem like a bad entry to you, but we'll have to wait and see how it turns out, because already where my stop is up 16%, where the current price is probably up 30%. Now that's in a very short period of time. So this is a good momentum move that we're catching here. So I'm just happy to let this go here. I've entered here. I've got my current stop here. I will probably raise that this week because the price is up again. So that will just follow with the momentum stop. And already, as I said, I have 16% locked in. It can't get any worse. So that's how I look at it. And if we look down here below this, analysis is what gets me in. So I look down here, I get my break here, I get volume, I get momentum above the average. My trend intensity rating is 10. It's the alignment of stars that I like to see. So I buy it with a stop. And that's where I am at the moment. I'm just a simple new high, and I'm just following it with a stop. And that's how the two work together, very simply. Okay, another example is one that I actually did go through a couple of weeks ago, Zimplats, which was looking fairly good as it broke higher. But just to have a look at what's actually happened here, Zimplats, okay, it had a good run up here to about $26. It came back to about 20. It faffed about in a consolidation to the range. Then we start to see the buyers start to lift their limits, and they get higher lows until it pushes for a break. And this is what often happens. And then you get the break here, you buy the open the next day, and you follow with a stop. So here again, I've got the break here. It's above the average. My volume has gone gangbusters. Momentum's kicking higher. This is a really solid looking trade, and a solid looking momentum trade which could take us anywhere. So at the moment, it's already taken us from about $26 to nearly $34 in a very short period of time, on some very good demand. So that's a great stock. Trend intensity's rating is 10. Just simply follow that with your stop loss. That's all you do. I mean, if you use Stockradar, I have two entries, a trend reversal and a new high. You may just want to take trend reversals. You may just want to take new highs and focus on those. Keep it as simple as possible and easy as possible. The aim is to make money no matter how you do it. If you get a tip on how to do it, or you get some sort of strategy that works, then follow it and use it. And that's what I do. Okay, so that is Zimplats. I'm going to go through one more stock further I went through last week, which is Coles, only because it's interesting. As I talked to you before, sometimes there's nothing happening on a chart, but you can see what the development is showing you and what may be likely to happen. So if I look at Coles here again, which we looked at last week, for those of you who remember, I've just got to get this in the right spot. So Coles, we've got our resistance up here at R1 and a support down here, and we saw the building pattern here of support. This is since entry. We've had a big consolidation pattern here. It's now starting to break above these highs here, which is a good sign, but we really need this high up here at R1 to go before we really get that new high entry and look for that momentum trade. Good consolidation, big support down here. Buyers are getting lower lows are going here. And if we look at the volume here, if If I just squeeze this up a little bit, because we've got a couple of big ticks to get rid of. You can see that the volume there, especially in these last few days, start to pick up a bit. So there's a bit of interest here. Momentum's picked up, and momentum. So that's cold. As I said before, it's nothing to happen at the moment. Just wait for the timing, and when the signal comes, you just buy it, and that's how it works. So it may come, it may not. Trend intensity rating is +1 on coals at the moment. Okay, so that's sort of the markets I wanted to go through today. Plenty of new entries coming up. Well, I guess, new entries coming up because there's so many stocks that aren't trending at the moment, so the opportunities have got to be good. So keep an eye on the trading centre for those that are lurking. There's a lot of stocks moving up into that grey zone, which is neutral zone on the trend intensity rating scale. Just to give you a quick idea of how my trend intensity, I'll do that in a second actually when I'm talking about the trend intensity indicator. I'll show you this chart again in a second. But for the moment, what I want to go through is my trading tactics. We have, so it's momentum measures acceleration. So I just want to give a recap on the trend intensity indicator. 4 components of the trend intensity indicator: trend, volume, moving average, and momentum. We're looking at momentum today. Next week I will look at trend. Okay. The trend intensity indicator combines and weighs 4 simple tools. It combines them and calculates the trend intensity indicator, which develops into the Stockradar trend intensity rating system. The trading centre, which I have as my main trading page, is structured around the trend intensity rating system that rates all stocks equally. This generates the trend intensity indicator generates an invaluable benchmark that highlights only those stocks with compelling trending qualities and offer the best prospects of sustained price movement. So if we just have a quick look at that page I was going to show you here, and some instances the top-down approach is what people do. I do bottom-up, because sometimes in sectors like the commercial services, consumer and commercial and service sectors, which I've built, there is about 20 stocks in there. There are 2 stock picks, the rest are doing nothing. But the 2 stock picks that are doing well, Computer Share is up 67%, and National Storage is up 28%. Okay, so that's pretty good. The rest of them aren't doing anything, but as you can see, there are plenty in the grey area here, maybe lurking, and there are plenty still struggling down here at the bottom. But that gives you an idea how I structure the sectors, how I structure the page, and I've got all the sectors listed up here and down here to show you all the ones that are how they're working, where their stops are, etc., etc. So that's where the trend intensity starts, comes into the trading centre page, and that's built and designed for you to give a good, quick and fast recap on what the stocks are doing at the moment. Okay, so momentum. Okay, what does it do? It measures crowd behaviour, and we know how important crowd behaviour is to any market. Okay, the most interesting aspect of price movement is that which we cannot value. That is the blue sky of imagined possibilities. The things that are physical we can value doesn't really do much for us. What we want to do is imagine what possibly can happen, and that's what can drive a price. So the fact, here I go here, whether it's fact or fiction doesn't really matter to me, okay? We roll with it because it happens regularly. So in a stock like Commodities, and this is going back a while, just to give you an example, it just went up and up and up and up from roughly $10 to over $35. Now, that's not what every stock we're going to trade is going to be like that, but if we can get onto one of those stocks, that's fantastic. And here we can see the momentum, the volume, everything was pointing northwards. I use the MACD as momentum measure. There are other things you can use, rate of change, momentum. They're all measuring those same sort of things, which is the rate of acceleration. Remember, the foot on the pedal, foot off the pedal, and so that tells you when stocks are accelerating and not accelerating. So momentum is a fantastic thing if we know how to capture it. Okay. Current example, South 32, which has just really got exponential. It's tried this trend, it's gone up this, and it's gone up higher and higher and higher. So we can see the momentum building on this stock, and in the end we get a little power thrust that pushes up here, we've got a little power thrust that pushes up here. But we've got an original trend reversal down here, and this goes right back to late 20, and we've been in this stock ever since then. Okay, so we haven't had a more than 10 to 15% correction in this whole move. Maximum momentum reading tells us the crowd behaviour is getting on board, Reasons matter little, just get on it. It's all this imagined possibilities that people are thinking about, not the nuts and bolts of fundamentals of profit and loss and balance sheets and things like that. It's the imagined possibilities that people are focusing on. So for South 32, commodities and how high they're going to go is what it's all about. And all those little metals that BHP didn't want, South 32's got a lot of them. So the momentum's building on this one. It's still going high. You can see the volume's still good, momentum's still good, and who knows where it will go. But for the moment, it's going up. So we just simply follow this without stop loss, because I need to lock in this profit because it's a good profit. I will not let it escape. Crowd behaviour is fickle and can disappear just as quickly as it starts. So that's why you need to stop, and you can't make a decision on the run, because if you make a decision on the run, you will make the wrong decision 9 times out of 10. Okay, a stop knows far better than you do, especially in emotional times. So control is absolutely key when you're doing this. Okay. It only works if you are disciplined about this process. So with a stock like Domino's, which was going through the roof, could do no wrong, everything was perfect, it suddenly drops from over $160 to about $70 very quickly. Now, the stop's in here, okay, that's when we get out. We didn't get the top, but we certainly protected ourselves from the fall. And you can see here how momentum was strong here, and it just disappears. Now, this is an example to show you what can happen. It doesn't always happen like this, but momentum can. Often, when it goes, it often goes very quickly. So be very careful. That's why the stop is a big part of this momentum trade. Okay. So how do I actually use momentum? Okay, I'm using the MACD. The primary rule is the indicator lines above zero or below zero. So if I go back here to Domino's, you can see here the MACD is in positive territory above the zero line all the way up through here. Okay, so to me that's positive. The interaction of the lines is secondary, but it does have an effect on the rating and how strong it is. So if I go to that page again now, you can see the MACD positive. Okay, if the MACD line's above zero, that's good, that's positive. They're all positive, these ones. MACD histogram, is it rising or is it falling? Is it above zero or below zero? And you can see that if we go back to this one here, there's different interactions here. The most significant one is above zero or below zero to me. Okay, so each of these outcomes, there's 8 different outcomes basis my rules in MACD. Each of those outcomes gets a value, and that value is plugged into the trend intensity rating. Okay, so that's basically how it works. And if I go to the next one here, we use the same process for each indicator. So as well as momentum, I use trend, I use volume, and I use the moving average. And each of those ones is given a value, a positive value or a negative value, which goes into the trend intensity rating system, and that's how I rate my stocks. It's a very simple process, but that's how it works. So you can review this as much as you like, but that'll tell you all the values and stuff. It's all my proprietary information, but you get the idea of what I'm trying to do. Okay? So remember, indicators are always secondary to price. Okay, so we looked at a couple of stocks there, but all look pretty good, but the price hadn't kicked off yet. So the only stock market advice you can trust is the price action, because the price never lies. Price is God. Okay, so yes, we can easily capitalise on momentum, but we need to coordinate this with control offered by stops to ensure the optimum outcome. Simplicity drives effectiveness in my world. That's pretty well Stockradar's intention. Specific and clear focus, precise aim, then shoot and manage the trade. Okay, stay safe, watch your trends, heed your stops, and I'll see you all next week. Thanks very much.